Well, I'm going to pick up where Marie left off, and indeed I'm here, I guess, as one of those international investors I'm from Ireland, but based in Dublin, representing a large company, which I'll talk about in a second. And we are, aiming to invest here, get involved both in the recapitalization of Irish real estate and also in doing new builds, and particularly for American tenants. We see it's an interesting market, quite distressed, but indeed one with opportunity. But the purpose here really is to give a company perspective of how we are looking at this whole agenda, both as an investor, on our own account, as an investment manager on behalf of many sovereign wealths and large institutional players, and as a developer, how we approach buildings and our view on this whole subject. And I think you'll find that as I go through the presentation, that notwithstanding the lack of evidence to date, we're absolutely committed to this agenda more so than ever, and it's become a very central part of our sort of what we're doing as a company. Just briefly on Hines. Hines company is privately owned. We operate worldwide, 17 countries, about 42 billion of assets under management. We have developed about 38 million square meters of space and about 4.4 million square meters under development globally currently. So there's a massive pipeline, and I can assure you the green agenda across that pipeline is a massive part of what we do. We have an internal group called Conceptual Construction, which spends a lot of its time evaluating new technologies, looking at how cutting edge thinking in both mechanical, electrical, physical construction. And I was fortunate enough to be in New York last week with the guys who run that. So some of the things I'm going to show you later on are coming from what they're currently doing in that space. Again, worldwide operations, we operate on 5 continents now. We've just started in Australia, obviously right across Europe, and all the BRICS, and we're pretty, in many markets in the US, we're a dominant developer and manager of real estate. In terms of sustainability and green buildings, we have been at the forefront in the US since, I guess, since the early 90s, and we very much see it as part of our brand, part of the ethos of the company. The founder of the company, a gentleman called Gerald Hines, has always been a great believer in great buildings, and had a personal mission as soon as things like Energy Star or the US Green Building Council got set up, indeed the one in Germany got set up. Hines have been at the forefront of getting involved in these and trying to help push the agenda, often by practice rather than just thinking. We actually go and do it in our buildings. I think this is an illustration of a building just finished last year in Houston, which is a LEED premium. Despite the fact it's a big commercial building, it's achieved a very, very high rating. We obviously go and benchmark all our buildings, so we currently are going back, obviously we manage buildings on our own account, we manage them on behalf of third parties and funds, and there's a strong push to go and do that type of benchmarking internally, much the same as John was talking about. The agenda is to go back through the complete building stock, look at what we can do. All new buildings absolutely have to be at whatever level we can achieve in terms of good or excellent. There's certainly, and I'll come back to the investor's view in a second on that, but certainly the agenda is to push it as high as possible. And where we go back through our previous portfolio, the agenda is to start benchmarking that, look for issues and opportunities where they can be upgraded as soon as possible. So I think the first thing I'd like to say is that the investor's perspective of sustainability is a broader concept, and I think we don't look at environmental issues in isolation. And I think this is the world has changed radically in the last I would say 18 months. So we are now we respond to many RFPs, requests for proposals, from the sovereign wealths who are allocating a lot of money into the global markets, and we take on mandates that are often multi-billion mandates to operate across many markets. And it's now got to the point where we probably 50% responding to that is our ESG, which is our environmental, social and governance requirements. So sustainability, and we have an officer in the company responsible for this. It's not just the environmental, it's social and governance. And unless as a company and as a developer and capital allocator, we are pushing all these agendas, we're not going to get the investment going forward. I think the point Marie made about bank debt is absolutely true. We're seeing that coming through straight away. As you say, it's probably not on the agenda of bankers in Ireland just today, but it is in the States, it is in Europe, and proving your credentials in this space to act as a developer or an investment manager is becoming absolutely critical. Just briefly, what do we mean by social? It's the reputation issues. You will not get investment capital to put into buildings unless you can show that your company is not going to get that investor or sovereign wealth fund into trouble with what you're doing with your developments. And from a governance perspective and managing risk, same sort of things. I think, as you'll see, the last few years have shown how many developers and investment managers destroyed a lot of equity by taking very risky strategies through lack of governance, lack of structure within their company. So what we've done is we obviously said, right, going forward, we have to have obviously a big social agenda. We've actually reworked the governance within the company to put much higher priority on risk management, and the environmental agenda has become absolutely critical to what we do. These are things that we believe are absolutely fundamental. Tenants prefer to occupy green space, no question about it. We hear it every day of the week. It increases productivity, so the quality of air, light, view is essential. And we would discuss right across all the businesses we have, we see tenants looking for green space straight away. It signals, from our perspective, the right values to our firms, to the partners and employees within the companies, in particular to investors. We believe higher specification buildings, and by that I mean ones with green attributes, have lower costs of occupation, albeit you have to start looking at the owner and the occupier and the equation between the two of them together to make that benefit work for both parties. We believe that there are much higher regulation hurdles on the horizon, so the failure to future-proof buildings now is going to lead to a significant risk of capex, disturbance of your tenants, and obsolescence. And although there's no data set today to say that there is a brown discount, we're absolutely convinced it will start to show up pretty quickly in the indices over the next number of years. So, as I said, limited historical data to date, so if you look at it and measure it, it isn't there, but we are absolutely certain that higher environmental standards will attract higher rents. They are leasing up faster, even if the tenants don't pay more. They will earn more reliable cash flow. They are less risky from a cash flow, and therefore will be better liquid investments and attract lower cap rates. So the incremental additional cash you learn from environmentally sustainable buildings and the lower cap rates that they will trade at to avoid that brown discount will lead to better investment value. Now, again, there's so limited sets of data to date to say that that's the case, but I can assure you that our company is absolutely convinced about this, and all our investors and indeed all the major sovereign wealths that we work with that give cash to us believe this to be true, and we would not be tempting to go and build anything without taking this agenda on board. There is limited data. This is from a group called PPR, who is a research company in the States, who have done, this is just based on 50,000 square feet or larger buildings built since 2002 in the US. And what it is showing is that where they have a LEED certified building, the absorption of that in the marketplace, the LEED certified buildings obtain a higher percentage of the absorption. So there is some data sets that are starting to come through that prove the case, this being one, but generally there isn't a whole lot of data there yet. So we believe that we've actually, our sustainability officer and our risk officer within the company are working very closely together, so they're not seen as two isolated issues at this point in time. Indeed, in all markets we're working in, and be that from US through to Europe or any particular country, we're looking at the pipeline of legislation, the pipeline of regulation, and it's now a risk issue that comes right up on the risk register straight away in evaluating a proposition. What are the regulations coming through? We heard about the UK ones. California, I believe, enacted a piece of legislation a couple of weeks ago that says by 2030 all buildings must be zero net buildings, so they can't use, effectively they've got a zero carbon footprint. How that'll be achieved, we don't know, but that's what's coming down the line. So regulation is a massive risk and has to be dealt with. Again, it's not just the capex issues, it's the cash flow loss. And you've also got the commodity price risk, so the operating costs, the fluctuation in those is something which you need to deal with. As a company, we actually produced our first ESG annual report. So coming back to the benchmarking that John was talking about, again, we're not dealing with environmental issues in isolation. We look at them as part of the social and the ESG, the whole series of issues that are being demanded from our investors. I have a link to it there, but if somebody wants it, they can contact me and I can certainly get them a copy or give them the link by email. It's interesting because we're one of the first companies in this space globally to put out a report of this nature out to the sovereign wealths, out to our investors, to say, here's how we're dealing with all these issues, and in particular the environmental issues, and here's how we're going to approach them going forward. Finally, to wrap up, this is a building which actually just went on site in San Diego last week, about a 40,000 square meter building. It is going to be a zero net building, so it's not going to have any carbon footprint. And we spent a lot of time trying to determine what technologies to use. So we actually, Heinz funded all the research on this, put a team in it for a year to look at everything from wind technologies to fuel cell through to photovoltaic, and to produce something that was going to be, let's say, the most intelligent from an investor's perspective and the most intelligent from an occupier's perspective. How could we get the building down to a zero carbon footprint? And what we're going ahead with is a building that will involve 4 fuel cells, which will convert natural gas to electricity. They'll operate 24/7. So when the building's not using the electricity or the energy, it will go into the net, into the local grid, and that was critical. In some places where we've tried this, that hasn't been possible. It is possible here. And we buy the biogas, which will be fed into the local gas network to sort of equal to the amount that we will use in the building. So to some extent, you have to have the gas network that will take the biogas. You have to have the electricity network that will take the top-up energy we'll put out of this building, and equally we have to buy some in at peak points in time. But overall, this balances out. One of the interesting things is that the fuel cell is from a company called Bloom Energy. And one of the reasons why Bloom Energy have been able to push, we understand, the technology to a new level is because people like Google, eBay, Microsoft, whatever, have been buying these fuel cells more to do with their occupational needs elsewhere. So they've, a bit like flat screen technology, buying a flat screen for a computer would have cost you 600 euros 10 years ago, it's 50 euros today. As this technology becomes more widespread, it'll become more cost effective. This will be a zero net building. That's a picture of fuel cell there. It's about a 4.5 year payback for the tenant, but it's not possible to, if we were asked as a developer to sort of fund up the capital cost of this and let it at a market rent, we couldn't without working closely with the tenant, looking at their occupational needs over a period of time and their occupational costs. And it's when we start to look at those two things that this thing starts to balance out. Even then, with this particular technology, it does need a state subsidy by way of tax credits, which California is providing to subsidize the cost to get it into a positive, let's say, a positive perspective. In fact, based on the tax credits the Californians provide on this particular building, the tenant will see a positive 2 million benefit over traditional occupancy costs over a 15-year period. But the tax credits are worth about 4.5 million, so it balances out there. That said, our strategy as a company and our conceptual construction group is to keep pushing this technology, to keep working with the technology providers, and try to work with our tenants to install these type of technologies in every building we're doing, not just in the US, but in Europe and in Asia. And again, this is part of our message back to investors. We are doing this. These are the type of technologies we're putting in. We will explore and be as cutting edge as possible in the use of these technologies to cut the carbon footprint of the buildings, and that's the strategy. So I think from our perspective, from a developer's perspective, and also as an investor, this is fundamental to everything we're going to do. It's not an option anymore at all. We will not raise capital unless we have a strong agenda on this front. And I say raise capital from institutional style investors or sovereign wealths, and we will not be able to get debt for any significant building projects unless we have in particular closed off the risks associated with the brown discount that's likely to emerge through regulatory issues over the next decade. That's it.